Hello and welcome back to another training session on the Wolfpack Pro indicator. If you're new here, I'm the creator and designer of this masterpiece, and today I want to show you about these magical golden crosses, which often predict massive price pumps. I'm going to walk you through my thought process for deciding whether I'm going to commit to a golden cross or whether I believe that it's going to turn out to be a dud. However, more often than not, they turn out to be successful. So we're going to walk through a checklist that you can use for deciding whether you're going to commit to a trade. And before I get into everything, please click subscribe to the channel and you can get notified whenever I upload. I'm going to be doing a lot more training sessions in the future. And if you want to help me out even more, just click the thumbs up button and it'll help boost this YouTube video in the algorithm. So let's walk through these golden crosses. So you can set alerts on these. You don't have to stare at the charts all day, and that was what I envisioned for when I created this indicator. So if you want to set an alert, just come up here, click that alert notification, and select Wolfpack Pro, and you're going to get a drop-down list for all of the various symbols that you see, and select once per bar close here. You can select it for only once, but it's not going to repeat. If you want a recurring one, you can select this one. I believe the free plan on TradingView allows you to set up a few alerts. If you want more, your options are either upgrade your TradingView plan, or you can subscribe to my Patreon, where I've linked the most relevant ones and I've handpicked various coins, and you can get Discord notifications with one click through my Patreon. So just select once per bar close, write an alert name, and something you'll remember when it comes up for that specific coin on that specific time frame that you're selected. Everything that all the settings that you have on your chart are going to be wired into your alert. So after you do that, you can click create and you'll have a notification for the golden cross. Now, for my checklist, what I have here, so the golden cross prints after an emerald diamond if the trend is continuing and confirming. So we can scroll back and we'll see there was another golden cross here. There was some emeralds, but the trend was not continuing, so it canceled. It did not print. And by doing that, it eliminates a lot of false signals. So here we got one that printed, however, it didn't work out. So we'll do a comparative analysis here to show the differences between these two. And you can find out whether they're going to be successful or duds using this checklist. So first off, draw in on the price chart. You should know how to draw in support and resistance and trend lines and understand price, just basic price structure. So what I'm talking about is higher lows, lower highs, higher lows, etc. Now, the next thing that you'll do is also do the same thing on your Wolfpack chart, and then you have both of these to compare. So let's go ahead and do that here. So I will draw in my horizontal line. That's going to be resistance, and you can see here we were making lower highs, and lower lows, and then right here we made a higher low. So this is the beginning of a change. So we actually form this rising wedge here. Now, we can also draw, I see a couple more things here. We can draw on this trend line right there. We see that this wick just bounces off of it, which is beautiful. So right after we get that bounce, we see the golden cross print. Now, this golden cross printed towards the bottom, and we've broken out of this downward slump that we saw, and we came down and we tested that what used to be resistance, and it is now our support. So after that confirms and we have a golden cross, we're already feeling more comfortable about entering this position. But let's also do it on Wolfpack. So we can do the exact same thing, just like this. We see that we're getting rejections here and here, and then we cross through right there where we have the golden cross. So that's what's going through my head when I get a notification. And the next thing that I'll draw your attention to is, so we're having lower lows, and the golden cross prints on the higher low as well. So we can see this main wave. We see a difference in the structure, and we would suspect this pink wave has come all the way up and made this high right there. There's a red dot. And we come down and we make a significantly higher low. And I'll just draw this in. It's such a tight higher low. It's so significantly higher that the elastic band is wound so tight that it's like a slingshot about to explode. So there's higher probability trades there. And the next thing we can look at is this middle wave, the blue and red wave. This is the acceleration wave. And what I'm seeing is we have higher low here, higher high, but we're getting some mixed signals here as we have a lower low compared to this one on the blue wave. And so we come up and we have a higher high compared to this red high. And then we have, finally, this is our lower low, this is our higher low on the blue wave. So we have, not only is this and this golden cross this is a higher low, but we also have higher highs on the red wave and higher lows on the blue wave. So everything seems to be pointed upwards. So what we could do is we could treat this line as support. We're assuming in our trade as we enter the position that this line is going to, we want the green wave to stay above this support line. And when it falls below, which is right at this red X, we're going to see some momentum coming down once we pass through it. So that would be a good place to look to collect some profits. Right at the red X, or right before the red X, as we've already had a lower high here compared to this high. So you could collect profits there. You could also collect profits there, or you could wait for the red X. So let's see how that looks on the price. So we enter on the golden cross, and we'll scroll up. And our two exit points are right at the peak here. And there's a slight cool off period. And here's where you could think about where rebounds will be, and I'll show you how to do that shortly. I just want to go through this golden cross that did not work out, just comparatively to show some of the differences. So just on price structure alone, we don't have higher lows yet. This would be what we see on the chart. We would see this golden cross print, and we would be at this moment in time. So we could draw in our support. So just following the checklist, I'll bring it up one more time. So start drawing your price action structure on the chart, and then do the same for the Wolfpack waves. So looks like we have support around here, and it looks like we have resistance at this area, and other than that, perhaps you can draw some trend lines in here. So this used to be resistance, you came above, and it's bouncing, bouncing, and then we are hitting on this orange support line. So let's look at what you would see on Wolfpack. So we would be around here, and what we would love to see is for this pink wave to start coming up higher and higher. So we have blue, the blue wave has made a higher low, the acceleration wave, and that's great. What we'd want ideally is, it's going to be hard to break above this because this is really, really high, but so we might just see a slow gradual increase like we do. We have a higher low here compared to here, but we also have a lower high. So the wave has also crossed over to dark purple, and ideally we'd want a strong line going upwards, or at least we'd want it to come up significantly so that we would have a more probability that it's going to come into the green, and then we would want to see the green wave higher than this. So we'd want to see it to come all the way up and make a higher high compared to this one. That would be excellent. That's what we were looking for. It did not do that though. Instead, we see the red circle, and so the big red circle is a bearish trend continuation pattern. So we see that print. We're also at our support, and we've seen it slowly creeping down to the support, and all that we could go off here is to just draw a momentum support. Of course, we fall through it. So we already know that this golden cross is not going to work out. We would need to see something else. So we haven't fallen too far. You haven't lost any money yet if you entered a position here. So here, let's just continue to see what happens. Now we see it takes a sharp turn downwards. So if you had that foresight to know what you should see, which is this pink wave coming all the way up to make a higher high than this peak here, it's not doing that. It's not doing what you would expect if it were going to work out. So you could have gotten out before this. You could have gone even on that trade and you wouldn't have had any loss, and you lived to trade another day. So this is where the downwards trend really starts, and we find the exact bottom with our golden crosses. So next we're going to start looking for, let's say you missed this pump and you were worried about being a FOMO buyer. What we could do, so we've come ahead here and we're looking for rebounds. We're looking for pullbacks, and we're going to buy the pullback. So things to look for. All we have here is some trend lines that we could draw on the price structure, but also on the Wolfpack waves. And this is where the real magic starts happening. So we're going to extend these lines out. This is all we have to go off. We're anticipating it does bounce right there. And this one passes through that peak, and it also bounces right there. So both of those would be buy signals. So we could place a vertical line on the green dot, and again on this green dot. Now, what you're going to expect on the smaller time frames is that you will also see higher lows on the 3 or 5 minute, depending on how, if you're trading off the 15 or 30 minute, I typically go down 4 or 5 times to that time frame, and I will enter, and I'll try to optimize my entry probably on the bottom of the wick, so you can get a better entry by going down to the smaller time frames often, if you understand where price is likely to head. So let's say here we've printed this green dot, and we go to our lower time frame on this bar. We're going to see higher lows being printed. We're going to see favorable trends and structure on Wolfpack. So that's where we would enter. We would try to get the bottom of that wick. We would come all the way up, and we can draw a support line just as such here. So we have this low, and we could cross it through this, right about here. So after we come down, potentially on the smaller time frame, you might find a more optimal exit. But on this time frame, as soon as we cross down, potentially we exit after this candle comes up. So that trade still winning. We didn't get the optimal exit, but here we would see this structure, and on the lower time frame, what these lower highs are going to do is show up on our lower time frames. So potentially you could get an even better exit, but I'll just mark it there. Alternatively, you could stay in the trade, and that way you're getting in early, and you see it makes a higher low in price structure, which is favorable. And we have this resistance, so let's draw on our resistance. But then we make an even higher low here, and we've also bounced off this downwards line, which used to be our resistance. Now we're treating it as support. So I hope that's clear, and we're going to let's just maximize Wolfpack so we can try to plot a better exit. So let's say that you were in this trade in a position here. You could draw your downward sloping lines, something like that. Let's just remove this. So we got this, we got this downward sloping line, and if this peak is going to come down, it would fall below the support. Instead, it looks like it's coming up, so this is a buy signal. We also see that the blue wave is making a teeny tiny higher low, but in comparison to this, it's much higher. So here we see that the acceleration wave makes a lower high here and then a higher high. So it turned out to be very, very favorable. So we'll draw in potential support right there. Alternatively, you could exit once it passes through here, or you could wait until the main peak makes a lower high. So let's just go forward right there. That would be the lower high. So that could be your exit. Or if you were treating this as your support, you could exit on that. So let's reveal price and see how each one of these did. And in your own backtesting, I recommend you click this this maximize pane button, and it's going to block out price, and you just treat it like flashcards, and you can do your own practice and your own backtesting to see how many trades that you would have won. So we'll see here which of these trades we won. So there's this buy signal, this one on this dot also is favorable, so you could treat that as another possible entry point. So our exits are just about here, and immediately what we should be doing is drawing our downwards line from the top through this peak. Try to touch as many peaks as you can. You're not going to touch every single one. And we come down, and instead of falling through it, we see this bounce. So this, again, this dot would be another buy signal. So we don't have any resistance. There's nothing holding us back from going higher. The only thing that would hold us back is if we made an even lower high than this peak. So we'll see what happens. What we would want if we enter on this trade, we want to see this peak come higher than this one. So that's going to be our resistance. So if you want, you can even draw that in as a horizontal line. So you would plot a horizontal line here and hope that you come higher. You didn't, so that would be an exit. So you would have entered here, you would have come up, and you would have seen, okay, it's not doing what I hoped it did. It's actually forming a lower high. So we're going to go forward. We'll keep moving. We have a green dot. However, it's unclear. So let's just draw from the peak. This is all that we really have. It actually does align. It does line up, which is favorable. So that's a potential long entry. Let's plot it in. Let's say that we bought there. Make it green. All right. So let's go forward, and again, what we're hoping for is for the high to be higher than this one. So this used to be resistance. We're bouncing off of it. So we'll go forward. And we did. So we entered there. We set our stop loss below the support line on price action, and we would know that if we're falling below this line, if it really starts to come down, it's time to get out of the trade. So your stop loss would be probably 1 ATR below this. Used to be our resistance here. That's now our support. So to set it 1 ATR below that, to avoid long wicks that come down from market manipulation or whale dumps, go into indicators and strategies and find average true range. This is the best way to set your stop loss. And right here, it's hovering around 6 cents, 66 cents, or around that area. So what you could do is set your see the last swing low here, just set it 6 cents below that. So 308 was the last swing low. You would set it 6 cents below that. So around 302. So your stop loss would be right there. And that way you're not going to get wicked out. So we come up, we've entered the trade. And here we made a lower low. However, on a different time frame, like smaller than the 15-minute, that it actually might appear as a higher low. And you'd also have to check with the higher time frames to make sure that you are to identify if you're on a higher time frame trigger wave that's bullish, and that's going to give us a much more favorable position and bias towards the lower time frames. If we're riding a higher time frame trigger wave, we want to ride that all the way up. So right now we're working on the 15-minute on this chart. So we ride it up, and we see we make this high, make a higher high. We come down, and many people, looks like, bought that pullback. So we could draw in a support there. Just draw this in from right above there. And once we fall through that, we could plot a possible exit. And let's see how that performed. So it was right after the peak. And on the smaller time frames, you're going to see lower highs. Lower highs, you're going to really start to see it coming down. And right here, that's where we are. So I'll probably do an update on this chart to see where this ended up. But that's how my mentality is going into it. This is Bitcoin. We see on the 30-minute chart, we see golden cross, massive pump, and you just do the same thing. So we can see, we can draw it through these two bottoms, and it comes up about there, and that's where we get our bounce. Of course, after this bounce, we get this lower high coming in, which is bearish divergence. So that's going to be the peak. So if you scroll around and if you play around with them, you're going to see all kinds of lines that you can draw. And basically, you can do the exact same thing. It works with these red X's. If you get a red X alert, you can really see whether you should be buying or selling based on these. And be mindful of lower highs that are coming in. For example, this is a high, this is a low high. It's a very tight high, and that's where we get the massive dump. So short buyers are going to be looking to get you right there. If you're a short buyer, that's how your mentality should be. You should really be waiting for the market to cool down, and then you would see how tight this downwards triangle is right above there. So you would be looking to open a short based on this. And if the green wave comes up higher than this downwards triangle peak, you'll exit your short. All right, and we see the big green circle. That one just trend continuation. Trend continuation upwards. And this is just how I'm thinking about it. I draw that as a potential support, and when you have that, keep in mind that you also have to plot in the opposing trade. So this is going to be a resistance, and you want to weigh both of these against each other. So we have that cone formation. You could also draw it in on the price chart. So this came down really low, but let's just draw in as close as we can get it. We have the cone, and then we have a few candles bouncing off the cone. So after we have the green dot come in for the trend continuation pattern, we would have a strong bullish bias there. And there's endless examples and different types of patterns that you'll see. No two waves are the same, which is why I can't just tell you exactly in every situation what to do, as every situation is a new situation. And there's definitely going to be formations that are very similar and formations that differ. So it's all a learning process, but once you get the hang of, so you draw on your price action resistance on the main chart, and you also draw on resistance lines, then you start drawing lines like this. Once you break above that, what you're looking for is for this green wave to be above these ones. And as long as it's doing that, as long as it's continuing with higher lows, then you're bullish. So I believe that there is a golden cross on every major Bitcoin pump that happened. We can go back and look at these major ones that happened right here. We have the golden cross, and you can start to see it. You should really, really start to see it. This one would have made you rich. So we do the exact same thing. Keep that checklist, right? Draw in your price action structure, support, resistance, and trend lines, and look for higher lows, look for lower highs, or do the exact same thing on Wolfpack. And this is my strategy. This is what I'm using profitably, and it's back tested. I feel like it works. I really hope that it can work for you as well. So you start drawing in these lines. Once you get the hang of it, it's incredibly straightforward. So we cross above the resistance line, you get the golden cross, and we see that if we zoom in here, that's going to be our last high. We came above it, and then there's a higher low again. So what we're seeing is higher high, higher low. We are bullish, and we start drawing in potential supports that we can rely on in the future. So we'll draw in a support, just draw it in. Doesn't have to hit every peak, it just has to hit as many as you can. And it's an area, it's not an exact line. If you treat it like a line and not an area, you're going to miss out on a few potential buys. All right, so we draw that in. We see that we made a lower high. This is actually higher, and then this one's lower. So this is where we're looking to exit. And if you think it's going to bounce one more time, then you just can draw that in. And you see right after it passes down, we have our original support there. We've crossed down. So we can assume that it's time to collect profit. And as you see, the pump is over. Excellent, right? If you try that for yourself, see if it works for you. And here, just one more, we're seeing this. So potentially, if this red X did not print, you would be bullish. You would want the wave to come higher than this one. So you would, if you were long here because you broke through resistance, you would expect this wave to come up higher and then make a higher low than your entry. And in that way, if you buy on the supports, you're getting your optimum positions and you're not buying where you have to set your stop loss at an unfavorable or place that is too far away, where if you buy halfway up this candle, where do you set your stop loss? It's pretty difficult because there's a long way to fall there. But if you get in early on the golden crosses, you're going to set yourself up for a lot more success. So I think that about wraps up the video. If anybody has any questions, comments, leave them down below or join my Discord. Thumbs up the video if you liked this. If you want to verify it for yourself, feel free. And I hope to see you guys around. Subscribe to the channel, and I'll see you in the next video.